Second, houses are getting more expensive to buy overnight, and we're going to explain why. I have Ethan Brooks here, mortgage extraordinaire with Fairway Mortgage. I'm Jacob Sheets, a realtor with the Powers Realty Group, and covering all different properties from Milwaukee to Madison, Wisconsin. So Ethan, thank you for joining us.
I'm happy to be here. This is the stuff I love and geek out about. And I'm always scared to pull back the curtain too far with clients because I'll just totally blow them away with numbers and my geekiness. So it's fun to have a forum where I can let her rip. This is good.
Good. Yes, we're a good balance that way. So, getting straight into it, the big question is what is going on. There's a word out there that buying second homes is going to be more expensive, and I wanted to get you on so you could explain to us, why it is getting more expensive, and how it is, and just tangibly how it impacts us. So, I guess we can start off with the question of just what is happening.
Yeah. So Fannie Mae put out a bulletin stating that their LLPA, or loan level price adjustment, will be changing April 1st, and second homes and high balance loans are going to become more expensive overnight. They're effectively saying we don't really want to do them anymore, and we're going to make them more expensive.
And can you explain what those two different types are, like what a high balance loan is real quick?
Yeah. So high balance loans are in high cost areas of the country. So Alaska, California, etc. Then the conforming loan limit, the standard mortgage will say, you're allowed to go up to a significantly higher loan amount, sometimes almost $1 million, because that's where first time home buyers are at in those parts of the country.
Okay, so that makes sense. So as far as for people in Wisconsin, how does that impact them, or does it impact them as much in those different areas, or what does that look like?
So we don't see any high balance loans in Wisconsin. Think of it mostly on the coast in Alaska. What we do see and how we're going to be affected big time is second homes. We have all of these lakes in our state and pockets where people go up north, they buy their cabin, they have their lake home, people coming up from Illinois, and all of these mortgages are about to become more expensive.
That's great. So do you have an example at all? I know we talked just briefly before this about, I have a buyer actually that is, they're selling their place here in Wisconsin and want to get a second home in Florida, which is going to be different than some other scenarios. Some people want their second lake house in Wisconsin, that live in Chicago, all that. It'll impact them both significantly, but I wanted to see, what does the scenario look like for that?
So let's take a standard purchase price of $400,000 for a very nice lake home, and you can do right now, and still you'll be able to, down to a 10% down payment, which is very attractive because normally for a single family it'd be 15% for an investment property. So helps you reduce your down payment. So for that standard purchase, 10% down, as of right now, you could get about a 3.5% rate paying 1 point. And 1 point is 1% of the loan amount. So in this case, that'd be $3,600. So we'll call that the interest rate and the fees. After 5 years, you'd be paying, just rounding up, $60,000 of interest on that mortgage, plus that $3,600 at closing to get that rate.
And that's just for a property that would be at the $400,000 price point, right? So I mean, like that would exponentially go higher if you wanted a really nice lake house that was, Lake Geneva or whatever, it's $1 million plus. You would basically be doubling those numbers.
Yes, they are for the most part percentage based, and so up to that conforming loan limit is $647,000. This would all about to be impacted in the same way.
Okay, so then as that quick mini summary, right? Breaking it all down, now versus after, what would be the last day to do that?
The loan has to be delivered to Fannie Mae by April 1st. And even after closing, there's a lot that happens on our end to make that delivery happen. The whole loan gets audited in an entire extra time. The documents that the buyers sign at closing get uploaded in the system. Those get audited. The whole thing gets packaged up and then delivered to Fannie Mae. So It's not like we can close the loan March 31st and expect to make this delivery overnight. And so, because what Fannie Mae said is the second it gets delivered to us on April 1st, they're more expensive. And so every lender is making their change in their own way at their own pace. And Fairway, my company, is doing its best to ease the transition for everyone. And we're temporarily subsidizing second home rates actually up until April 1st to help make that transition. Because some people just found out that they don't technically qualify for that second home they're about to buy, possibly after April. So for those folks, it's go time.
That follow-up natural question is that when would you really need an accepted offer, on your second home in order to make it worthwhile? Your people are looking, they're waiting, they don't know what's going on with the market, but they're like, okay, now this big change is happening. When do I need to have this accepted by?
Yes. So we could have a contract, get an accepted offer up until February 24th, actually February 23rd, so that we could lock it in advance of our 30-day rate lock changing, because it would end up closing then after April 1st, or after it would be delivered to Fannie Mae after April 1st. So we have basically 29 days to get an offer accepted, and then it's time to get hustling so that we can get it closed up as quickly as possible.
So end of February, right? You said February 24th, accepted offer, and April 1st to be closed by, right? That's what you said?
Yep.
Okay, so obviously if you want to move on something, you got to get going fast to make sure that you lock in and save some money. And you said it was about, on that $400,000 house, about $3,600 in upfront fees, and then how much in interest again?
$60,000, and that's 60,000, and that's the 5-year cost for this mortgage.
Okay.
It's a nice way to illustrate the impact of different rates is that 5-year cost. Now, if you're buying a second home, you'd think that most people would keep it longer than 5 years. The average turnover in the industry overall is between that 5 to 7 year mark for how long a mortgage is kept. Now, you imagine the scenario for a second home, that's more often the stable vacation, multi-generational vacation. So any rate changes are going to be significantly more impactful, I would imagine.
Right.
So then after D-Day here, February 24th, assuming rates are exactly the same, market's exactly the same, which I don't think it will be, but based on today's pricing, that same 3.5% interest rate, paying 1 point to get it, would jump up to 4.5%, up approximately, paying 2 points to get that same rate. So any client at any time can choose, I call it's like a menu at a restaurant. You can choose whichever rate you want relative to how much or little points you want to pay for it. And that's a whole separate conversation, but you wouldn't have to pay 1 or 2 points necessarily, but that's the baseline for which rate you end up with. So
Right. Yeah, go ahead.
For this scenario then, you'd end up paying $77,000 over a 5-year period. So $17,000 more, same house, same purchase price, assuming the same market, $17,000 more, and an additional $3,600 at closing. So $20,000 more expensive over just 5 years, all things being the same.
So basically, if you were to get it now, you could get a matching car with your second house. No.
Yeah, you
that
can
would
squeeze
be
in a
the
Honda
difference.
Accord for your second home and still fare exactly the same. No.
So do you have anything else that you wanted to add in general on the property? I think that as a recap, we have, for someone who's looking, the complete quick overview is basically around 1 point worth of extra fees and about 1% increase of your rate over time, which it significantly adds up. So if you were to just fast forward to right now, those are the two things that you would need to know. On a $400,000 house, that would equate to around $20,000 worth of a difference that you'd be saving if you were to act on getting your second house now versus having to wait until after getting an accepted offer after February 24th, closing after April 1st.
They gave us the courtesy of about 45 days warning. With no time.
If you want your vacation house, go now.
The time is now.
Great. Well then, Ethan, do you have anything else that you wanted to add?
That's what I've got for this. I would say that's the gist of it. With every client that I talk to, we do a 45-minute to 60-minute Zoom consultation, and we discuss the whole nuts and bolts of your mortgage, even if you've bought 5 houses before. And we can discuss that rate menu, where we think rates are going, and we even strategize when to lock in your mortgage. So
Right.
there's a lot more to this conversation, but that's the gist of this change coming into place.
Perfect. Well, then we appreciate you guys tuning in. Hopefully this added some value. Make sure to like the video here, subscribe for more updates for the Milwaukee to Madison area, and if you would like to schedule an appointment with myself or Ethan directly, we will have our Calendly links right below, so you can schedule a time to meet with us or our team personally. Make sure that all your needs are taken care of. And if you would like to stay tuned to see all other videos coming up in the future, be the first one in the door, make sure to ring the notification doorbell below. All right, thank you so much.